Welcome back to my channel, Tisha Tips. Today we are going to talk about life insurance, whole life insurance. Stay tuned. Okay, so today I am just going to give you 5 reasons why I don't like whole life insurance. I don't mess with it. I had my experience with it in the past, so I know that it's tempting, but I stay away. Learn better, do better. I completely stay away now. Okay, so let's just get right into it. I got some notes here because I don't want to just, go off talking about how I feel about it. I want to kind of stick to some facts. Okay, so first thing, do you know they keep the first 3 years of your investments? Okay, so they lure you in with the promise of cash value. That's the whole thing, right? You get some life insurance with a side of investment. Ooh, great. So that investment part builds up cash value, which is how they got me. I'm young, impressionable, don't know much about investing. I just know I should get some life insurance because everyone is telling me to do. And then these people say, hey, how about you get this life insurance because it has also a little bit of investing on the side. That way you get both. I'm like, okay, crazy. Did it for years. Okay, so once you look at the paper, it's a schedule of policy benefits. Pull that piece of paper and look at the first 3 years. Look at your cash value. 0. It will be 0. Look at it. For some people, it's the first 2 years. For me, it was 3. For a lot of people, it's 3. For some people, it's even 4. Okay? I don't know anything good about an investment where someone keeps the first 3 years of your investment. Come on. So that should have been my first red flag. But I didn't know any better. Okay, number 2, the cost. Do you know? Okay, so I pulled a little example, as you can see. And we just did it basically for $150,000 of life insurance on the whole and on term. So I pulled an example of life insurance, the cost, right? For a whole life policy for $150,000 versus a term policy for $150,000. As you can see, the whole life policy for $150,000 costs $180.37 a month. If you look at the term, it costs how much? $21.36 for $150,000 worth of insurance. Why are we paying $180,000? You're getting the same amount of coverage, $150,000. Why? Why are you paying $180 a month? Why? Number 3, why do we want to mix these things? Why am I mixing life insurance with investments? Why? That didn't dawn on me back then. Like I said, I was just enamored with the fact that I could build up some cash value and just, I was happy with that. Insurance and investments, one and done, whatever. Why do we want to mix these two things? We don't do a side of investment with our car insurance. You know what I mean? We don't do a side of investing with our home insurance. So why are we doing investing with life insurance? I think we should separate the two. Get you some life insurance over here and do investing over here. Mixing the two is expensive, and it's expensive for no reason. Number 4, the fees are ridiculous. Okay? Ridiculous. So they tell you, oh, you're going to get all of these great numbers when it comes to your rate of return, right? 10, 12, whatever percent they're offering you. Check your paper. Check your paper. Not true. Because when they finish taking most of it, your rate of return is probably about 1%, maybe 2. Maybe 2. You can't even keep up with inflation with 2%. Come on. We have to do better. It's a lie. Okay? It's not better than term. If someone's telling you that, no. Now, if you are extremely rich and you need other places to put money after you've maxed out a 401k and you maxed out a Roth IRA, you've done all these things and you just still have an abundance of money that you need to shelter from some taxes, they have some investments like that you can do. But if you are just not filthy rich, you're making a mistake. Back out. Back out of that thing. Come on, back out. Number 5. How do you pull the cash value? Okay, you want to know? You can either cancel your policy or you can take a loan. That's right. So the $180 you're giving every month, we already know that the insurance cost of that is $22 based on the term life coverage for the same amount, right? So what is happening with your other $160 a month? They are putting it in an investment for you, right? So let's see. After a year, if they've been putting this money away for you, there should be something, right? Like I said, go look at that schedule of policy. 0, because they kept it. Okay? They kept it. Go look at that. But the only way to pull, once it does start to build, year 4 or 5, and it starts to build up a little bit, and you want to go pull some of it, try it. Try it. They're going to say, okay, yeah, we can get you a loan, and you can pay us interest. Wait a minute. So I put $160 in here every month. It built up a savings. Now, I would like to pull some of that savings, and you're telling me I have to pay you interest to borrow my money. Yeah, that's how it goes. Ask about it. Ask about it. Go try to get some of it. Go. You can cancel your policy, which is what I ended up doing, but that's because I ended up doing a lot of research and I learned about the difference between the two. Please, that $180 a month you're giving, stop. I do a $22 term policy. If you need security for 40 years, it'll go up to $40 a month, okay, for your $150,000, okay? Get you a term policy for 40 years if that makes you feel secure. Pay that $40 a month. Take that other $140 you were going to give them and put it in a 401k, S&P 500, Roth IRA, somewhere where it can make some money. The S&P averaged like 9-10% every year for like the last 80 years. At least you're going to get something. Look, see, this is why I have to have notes, because I get the... because I'm passionate about this thing. You see what I'm saying? So don't do it. When you get ready to pull the money, they're going to charge you or they're going to make you cancel the policy. And the bonus is when you do leave this earth and your family goes to get that $150,000 policy you've been paying for all of this time, with that side of investment that's built up, let's say that investment has built up to a good $50,000. Okay, so they should get the $150,000, which is your policy, and they should get your cash value that you've been saving up for within this policy. No, they only get one. And who's going to choose the 50 if you got 150 versus 50? Who's going to choose the 50? No one. They're going to take the $150,000 life insurance policy and guess who gets to keep the 50? Yeah, the insurance company. Look into it, honey. Listen, don't just take my word. Go research it. Research it. Matter of fact, like I said, go try to borrow some of your money. Go and try to borrow some of your money. See what happens, okay? Listen, that was my teacher tip for today. I hope that it helped you in some kind of way. Okay, if it did, please share the video. All right, and don't forget to like and subscribe. Thank you very much for watching.